Hello guys, uh, welcome back. This is MG from Trader Logic, and in today's video, I will be analyzing the forex pairs that I actually trade most of the time, and I'll be giving my ideas on what I think about them and what I'm gonna be looking at toward next week. As we actually in the Christmas holiday right now, I don't feel like it's actually the right time to trade, but still, if I find a very good setup, I might have to just take it. Starting on, we're gonna start with all the CAD. CAD and Australian pairs are probably one of my favorite because they move really slow, and I like pairs that move really slow because I don't have to worry about missing out on something just when I blink my eyes. Because there is pairs like TJ that you if you look away 10 seconds, you can miss out on the trade. You can actually get stopped out like in 10 seconds or something like that. But Australian pairs, they move really slow, and actually I take my time every time I'm entering a trade, or anytime I'm trying to get out. I just do it on my own pace. So yeah, OCAD is probably one of my favorite pairs. So starting on, we go start on the weekly time frame. That's where I start every time I'm trying to analyze a pair. I start on the weekly time frame. I used to start on the monthly time frame before, but right now I feel like the weekly time frame is just enough to start on. So on the weekly time frame, what we're gonna do, we're just gonna have to identify the trend. We just have to figure out like what's the trend on the weekly time frame, and then after that, we don't have to do anything else. We just have to identify the trend and then move on to the daily time frame where you're gonna have to do something. Just as I can see, like all the card right now on the weekly time frame, I can say it's bearish. Why it's bearish? Because it's making lower highs and lower lows. As you can see, like our card is probably bearish on the weekly time frame. However, most people will say, oh, but we broke structure right here. I can't say we actually broke structure right here because we haven't made a lower high yet. We haven't made a high yet. So if we make like a high and the high low and we start pushing up, then I would say like, oh, we already broke the structure. But as long as it's still right here, I'm still like considering like we still on a bearish structure on a weekly time frame. So the only time I'm gonna consider this as a break of structure and actually a shift of structures is if we push past this high and then we create a low high right here. Then I will actually start changing my buys into bullish. But this is a weekly time frame. It does not mean just because the weekly time frame is bearish we can't take buys because it's a weekly time frame. It takes 1 week for just one candle to be formed. So like if we find a very good setup about buying and we see the weekly time frame is bearish, we could just go on and actually buy because it's a weekly time frame. We just do this to actually get more confluences, just in case we get two setups, which one setup is telling us to buy and another one is telling us to sell, and we look at the higher time frame, we see like the weekly is bearish. We're gonna take the sell side over the buy side because we have a confluence on the higher time frame, which is very strong. So like we got the weekly. We're gonna write it down so we don't forget. We got weekly bearish. Let me just weekly is bearish. So after that, what we're gonna do, we're gonna go to the daily time frame, and we're gonna have to identify the trend over there too. On the weekly time frame, I can just tell the trend is bullish. We just had a shift of structure on the daily time frame. I can show you right now. As you can see, we are now making high highs and high lows, which means the trend is actually shifting, and we actually have a lot, like 3 high lows, so which means the trend is actually shifting, and the daily side of the market is actually bullish right now. So like for the trend, we're actually done already, so we're just gonna have to say we're just gonna have to say daily bull bullish. So we have weekly bearish and a daily bullish, so, which is actually not the same, but that's not the point yet because we're still in the beginning. This is how I actually start doing all my analysis. I start on the bigger time frame and then got on to the smaller time frame. So yeah, and since this is it's different, we have to go down to the H4 time frame and see what's going on over there too. Before we do that though, it's better that we draw our support and resistance before we actually move on to the H4 time frame, because I only draw my support and resistance on the higher time frame. I do on the daily time frame, on the H4 and on the H4 time frame. I realized that the support and resistance on the higher time frame are actually much stronger than the support resistance on the very slow time frame. If I say slower time frame or lower time frame, I mean 30 minutes, 15 minutes, 1 hour, or something like that. That's the reason why I don't go down low anytime I'm drawing my support and resistance. I stick to weekly, daily, and H4. That's all. So in this scenario, we're gonna have to draw that on the daily time frame, which you are on right now. We're gonna zoom out just to see the market much better, and we're gonna draw a support and resistance. As I might guess, everybody that's watching this video is fully aware of what support and resistance is, and if you're not aware of that, then I recommend you guys to go and actually try to learn that somewhere else, because it's probably the most basic thing in Forex, and I hope just everybody who's watching this video is fully aware of that. So how do I actually go by drawing my support resistance? It's simple. I just find the level that price topped out the most in the past. So to see those places, I go on the line chart. I use the line chart just to draw my support resistance. I don't trade on a line chart. I don't do anything on there. I only use it just to draw my support resistance. That's all. We're gonna find our line to yeah. We're gonna find out what horizontally line, this one. And we're just gonna start looking at the market, and you actually start drawing our zone, the place where the market is topped out the most in the past. This we got one. I was yeah. So when you're doing this, you have to know that you're not gonna have to be perfect, because everybody will have their own opinion on what zone to actually pick. Because just cause I draw like this, it doesn't mean you have to draw like that too. I might actually draw it bad, but you might do better than me. That's why it's better to just go on by yourself and actually start looking the zone that actually feel more to you like a real support or resistance. Or not, I would stop right here. um I drew my support resistance down already. So when now we are done with the line chart, as for now we are done with it. And what we're gonna have to do, we're gonna have to go down to the H4 time frame and actually figure out, try to see what's actually the trend over there and how things actually look. So we're gonna go back to the candlestick chart, and we're gonna zoom in, and then we're going to the H4 time frame. Over here, what we're gonna have to do is just to figure out, we have to see what's the trend exactly. So what we're gonna do, we're just gonna draw and actually find out together right now. As you can see, the trend is clearly just shifted. It was bullish, and we just had a shift to bearish. So right now we have the weekly bearish, and then the hedge for bearish too. So I think you kind of see what exactly I'm trying to say with that. So we like the bullish, the bearish side is actually outweighing the bullish side right now, because we have two of the biggest time frame that we use bearish, and just one of them bullish. So I think you know like what way you're gonna have to follow. As for now, what you're gonna be looking at in the market is just, we're gonna be looking for sales. We're not gonna be looking for buys, but that does not mean that we cannot take a buy. We can still take a buy as long as we actually the trade actually follow our actual follow. If it has enough confluences and they actually follow our guidelines, then we're gonna have to take that trade. But when you go in the market right now, we're gonna be looking for sales most of the time. We have H4, yeah. Now we will go to the 1 hour time frame, and here what are we going to be looking at? Over here we're going to be looking for order blocks. We're going to be looking for order blocks. I know I'm guessing that everybody know exactly what's an order block in the forex markets or in trading in general. So the order block is a candle, the last candle that the market made before it had the peak push either to the upside or to the downside that broke structure. think you guys understand what I'm saying right now. The last candle the market made before making a very big push, that broke structure. So right now, since we're looking for sales, we're gonna have to find find the outer block that will actually give us sales opportunities. If we find other blocks that will give us buy opportunities right now, it's not gonna make sense because our analysis is telling us that the market is more bullish, is more bearish than actually bullish. So it's better that we only look for sales. So if we come down here and you see the last time the market broke structure, we broke this structure right here back on Thursday last week. Gotta make it another color. And then when we go up, we can go to the actual time frame because we have like a lot of candles. Like which one was the last candle before the market actually pushed down really and broke the structure? I can tell the last candle is the up over here. So this was the last candle we actually had before the market actually pushed down and broke structure. And that candle that we have an outer block right here. This is an outer block. This is our outer block. So we have a outer block right here, and then we have our support, our daily support right here, resistance. I don't know if it's resistance or support. I don't know how. I don't recognize that. So I bad if I'm saying it wrong. So we have our support right here, our resistance right here, and then we have our outer block at the same time right there. That's already a confluence. And since we're looking for sales, so when the price get to this level, all we're gonna be doing is just looking for sales. So the thing that I actually do most of the time, so I don't actually miss out on the trade, because most of the time the price will come to my zone exactly, but it's not gonna hit my zone. It's just gonna actually probably you're gonna be shy of 2 or 5 pips, and then price is gonna start dropping, and I'm gonna miss out on that trade. So what I do is like I just expand my zone all the way down here. I know it's big, but just to make it look better, I just do it like this. I start with the candle that started the push to the outside. That's what I draw it like. If the market get here and they get past this level, I'm gonna move my zone. And if you get past this candle again, I'm gonna move my zone until this one. And if you get past this out without showing any sign of the reversal, that's when I will know that the market is probably not going down. It's probably not reversing on this level, and I will know that that level is not good, is not strong enough, it's probably weak. So I will just draw my level right here, which makes more sense because it is in the same zone with our daily support zone, daily resistance zone. Now we have resistance, and then we have an order block, and then we have the weekly and the headful trend supporting our idea of paying of actually taking the trade on actually this zone if the price actually is to come here. So that's exactly what I'll be looking at. So if price is to come here, I want to get some confluence, then I will enter my trade right here and probably aim for like 1 to 2 or something like that. 1 to 2, 1 to 3. I don't take like 1 to 5, 6, 7, 8. Nah. I don't believe that it's possible that for a trade to go that like that long. Nah, I can't handle, like, I just feel a lot of pressure every time uh my trade is in the profit, and I keep on waiting for it to hit like a certain level so I can take profit. I don't like doing that. I do not. I do not like doing that. So I have a lot of strategy, but this is probably one of my best strategy that I can actually teach to someone, and it's so easy for me to teach to someone because this is a strategy that I actually started trading with. When I started trading back in 2018, this is a strategy that I was using. At that time, I was failing. I wasn't failing because I did not know how to trade. No, I was failing because I was just no I was not strong enough psychologically. I was not able to handle when my position is in the drawdown, and I had a FOMO, and I couldn't hold my trade. When I was winning, I was cutting my trade short, and then when I was losing, I was letting my trade run all the way to my stop loss. But when I realized if I can actually implement what I actually do to trade that in Jordan, and do the same thing to the trade that are in profit, I become profitable because I was letting my trade run and hit the take profit at least two, like risk reward ratio, like twice my risk. I made sure my profit is actually twice or triple my risk. That was the only thing that was stopping me from being profitable for a very long time, because I would take a trade that risk is like $500-700, and then I would be like $200 profit, and I would be looking to close the trade because I'm scared the price might reverse and go take me out, you know. But when I managed to actually to handle my emotion and actually take the trade and feel like even if I lose this money, it's not gonna affect me with anything, I started being profitable. That's why I always tell people it's better to trade with the money that you're willing to lose. It's better to trade with the money even if you lose it, so it's not gonna affect you like financially or something like that. You're just gonna be fine. So I was trading at that time in 2018. I was not working, so all my saving, I was putting all my saving at a risk, and that's why I was not able to see my trading in Jordan. I was not able to hold my trade for that long because I had that fear in me, like if I hold, it's gonna go back down and probably take me out, and then I might lose all my saving, all of that. But when I decided to go back to work and I was trading the money that I was willing to lose, because even if I lost that money, it wouldn't hurt me that much financially because I have money coming in from a job that I was working at that time. That's why it's better when you are trading as a beginner. You need to have a job, have a part-time job, just have something that's gonna be bringing money in. For me, I didn't think I did a job. I thought trading would be easy for me and I'm gonna make all my money on that. And I quit my job, the job that I was working, to trade full time when I didn't even know how to trade at all. I was like, I'm gonna let us trade in 2 months, and probably the third month I'm gonna be making like major profits. And that was absolutely wrong. So I don't want you guys to go in the same path. So if you're actually willing to actually start trading, it's better that you start with a small account, a very small account, and also you have to be working. You have to start putting money at a risk, and the money that you're gonna be putting at a risk shouldn't hurt you when you lose it. It shouldn't hurt you financially. It shouldn't hurt you like emotionally. Like it shouldn't be like a like your world saving. Uh, that would be so that would be something that would help you a lot in your trading journey. So yeah, let's stop the talking and go to Europe. Euro ordinary. Let's see, Euro GBP, Euro JPY. Yeah, I'm gonna add like Euro JPY. This is probably one of my favorite pair too. Yeah, because it got JPY in there. I don't like to trade GJ, but I like to trade this pair though. Although they actually move probably 80% the same, but I just feel like this one is much better than GJ. Man, I'm not a fan of GJ. Let's go to the weekly time frame. As we can see, we are absolutely bullish. Bullish. Yep, as you can see, the weekly time frame on the Euro JPY is bullish. I'm just gonna go and write it down so we don't forget. No, like weekly. Weekly bullish. Oh, now we are going down to the. Now we're going down to the lower time frame. Probably. Let me see. Oh yeah, it's fine. We're going down to the daily time frame. We're gonna take this off and we're gonna zoom in a little bit just to see the market much better. And the market is kind of choppy on the daily time frame, but still, we're still gonna be able to find our trend. As I can see, the market is bearish on a daily time frame. On the daily, we have a bearish trend. We're gonna get rid of this, and then we're gonna have to draw our support and resistance down. As you remember, always I use my line chart. It's much clear to see which level the price has actually stopped at the most when you're using the candlestick pattern, because when you use the chart the line chart, because you can clearly see that there's no wicks that are gonna actually disturb you when you're trying to find the level that the market has stopped the most in the past. That's why I do use the line chart every day. Every time I come to my computer, I open my chart, and if I'm trying to find it to support resistance zone, I don't care what time frame I use my line chart, and I'll be able to master that because I've been using this since 2018. So I know exactly what I'm talking about and how it actually works and how important it is. So you have to actually do what I'm telling you. You have to use the line charts every time you're trying to find a better support resistance. Okay, so yeah, most of the time I only do 4 to 5 lines, but I prefer 4 because the market to get past this level is gonna take 5, like probably like month or something like that. So like I don't have to actually put a lot of lines on my chart. Sometimes I take off all of these just to make my charts more clean. But right now, I'm just doing this so I can actually show you guys what I actually do. And when you guys implement this on your chart, you have to make sure your chart is clean. If your chart is messy, you're gonna get bored of looking at your chart most of the time. But when you make your chart look sexy, you're just gonna be looking at your chart most of the time, and you're not gonna be missing out on a lot of opportunities because you like what you're seeing. But as long as you don't like what you're seeing, that's when you start losing confidence in trading, and you also start missing out on a lot of trade. So that's why it's better to make your charts as sexy as we are. So we'll draw our support and resistance on the daily time frame, and we are done. We're just gonna go back to the candlestick. And then, as you remember, we move to the H4 time frame, and over here we're just gonna have to look what is happening. Now zoom out a little bit. As choppy as it actually looks, as choppy as it actually looks, I can tell this market is bearish. I mean, it looks choppy, but it's still bearish in my eyes. That's the time that you guys gonna have to just like figure out what you think about it. You don't have to actually do exactly what I'm doing. You just have to come up with your own decisions. Sometimes you just look at the chart and you have to determine like what's a trend. Right now it looks so messy because the market is in a kind of consolidation. It's not actually consolidation because I can see low highs and low lows and all of that stuff. But it's not the best trend too. So like I'm just gonna show you like what I will actually do in this type of situation as a trader with 4 years of experience. So what I will do right now, I will just mark this as a bearish trend because I can see more low lows and low highs than actually bullish, like high highs and high lows. So, yeah, what I'm hoping for something like this. So we're gonna say H4 is big. H4 is bear, which means bearish. Yep, as you can see, the trend is obviously bearish. So as we know, the trend is bearish already. What's we're gonna have to find? We're gonna have to find order block. We find the order block and we take a trade on that order block. So now, what's the order block? An order block will be the just to remind you guys. So the order block is a candlestick or the push that started the very big push that broke structure. So the push that broke structure right now, it's this one right here. This is the push that broke out the structure right here, and then break structure right here too. So we come to the chart and we're gonna have to find the push that actually started that move. As you can see clearly, it's this one right here. This is the push. This one, this push is the outside. Started the this was the last push was outside before the market actually chopped really hard and break structure. So I will draw my zone as I told you. I start from the beginning. As the market keeps on going up, I will go with it until you get past this zone, and then the zone will be violated. So it's not gonna have the zone will have no value no more, and I'm gonna stop looking at it. I cannot trade no more trade as long as the market come past this level right here. But right now, again, we have our order block on the daily support like resistance zone, which means we have two confluences at the same time, and also we have two of the biggest time frame, which is a daily and the H4 time frame, telling us the market is bearish. So like we have three confluences, but I see another confluence right here. It's something I've not talked about because like this strategy that I'm teaching right now, I'm not teaching the whole strategy. I'm just trying to show you guys what I actually go on with taking my trade. So we have so every time you have a very big push, this one is called imbalance. So every time you have imbalance in the market, the price, like the markets will actually they will usually come back to fill out the imbalance before going back and actually continue the trend. So we have the imbalance right here, and then what I'm thinking about, like what I'm seeing happening right now, is like the market will push and actually fill this imbalance, this gap right here. This is a big gap. So the market will push and fill this gap, and then it will trigger our sell stop right here, our sell stop right here before the market actually start going down. So what I will do right now, it's like I will place a sell stop right here. So if the market comes over here, we're just gonna trigger my order and then probably continue the trend, which is bearish. What I named it just 1 to 2, and then my targets, I will be more monitoring the trade. So like I'm not gonna just leave it and like go somewhere. No, I'm just gonna be looking at it most of the time, and then I will decide when to get out or no. But it's better to always have a target. So if the price keeps on moving, you can tell yourself, oh, if price get to this level, I'm not gonna be greedy. I'm gonna just step out of the market. As for now, I'm gonna go with this like low right here because it's a support zone, and also it makes sense because the market will have to fill all this gap right here, and then it makes sense again because the market will have to continue, as our analysis is saying, the market will have to continue its bearish trend. So they're probably gonna see more lower highs and lower lows as the days goes by. So I'm gonna go get some water. Give me like 2 or 5 minutes and I'll be right back.
in audio.
I'm back. Oh, I took a little longer. Um, uh, yeah. So let's go. So this one, uh, that's what I'll be looking at. So I will wait for price to come to this level. If he actually does come to this level, and then I will go down to the probably the lower time frame, and then on the lower time frame I will start looking for potential buys. It doesn't mean just because price comes to this level I have to place a sell right away. Now it's like I might wait and then get some confirmation on the lower time frame, 10 or like 15-minute or 5-minute, get like a breaker structure over there, and then I'll be looking with the potential for a potential sell. But for now, what I do, just sit and wait. That's why it's better to have something to do when you trade it. Don't just trade because you want to make money. No, it's not gonna work like that. You gotta have a hobby. You gotta have to have something else to do that you can actually keep yourself occupied with when the trade is not coming, when you don't find a setup. So like, don't force the setup. The only thing that make people force setups is when they don't have anything to do and all they depend on is trading, and they feel like if they don't trade they're not gonna make any money. So like, they start pushing for trade that's not even correct, just to make themselves trade, which is not right. That's why I would advise you guys to have a job, have a hobby, have something just to keep yourself out of the chart. It's not good to be on the chart for all the time. Now it's better you look at the chart, you do your analysis, and you step out the chart and go do something. Go play soccer, go play volleyball, go do something. Just stay out of the chart all the time. Personally, the only time that I get on the chart is when I wake up and I do my analysis. I'll probably go to the gym, and then I come back, I check the trade again, and then I start finding entry. Like, I only trade the London session, so during Asian session, I only trade New York session and sometimes London session. So during the time outside of New York session, I don't look at the chart. I don't do anything. I only look at the chart when I'm actually in a trade. But if I'm not in a trade, I only look at the chart during New York session, because that's my session. That's the only session that I trade. And yeah, so when you make a rule like that in trading, it's better to respect it. You have to respect your rules, because you made that rule because it actually worked for you when you was probably back testing. So like, if something worked for you in the past, it's better that you don't break it. You just respect it. That's why I respect my rules a lot. I have missed out on a lot of secret setups just because they didn't follow my rules, or probably the trade was like outside my session, like my session that I trade on, and I did not take it. I don't care if it goes my way. I don't care if it goes against me. I don't care. It's just like, I'm just glad I respected my rules, you know. So we're gonna do one more pair before we actually stop this, and then I'll be posting a lot of videos, and I'll be explaining exactly how I go by this. I'll be probably probably doing some live trading or something like that. Just I want to show people that this stuff is possible. Anybody can do it. Not anybody actually. I mean, people that are actually willing to learn and put time in this, that they can do it, because it's not easy. We're gonna do one entity. Oh, USD. Yeah, we're gonna do an USD pair. UJ probably. Yeah, I love UJ. Bam, bam, We go to the weekly time frame. Pop. What's a trend? Holy hell. I don't know how to say this. It's bearish. This is bearish. Anyway, yeah, I'm saying this is bearish. It's kind of complicated. But like as I say, I would say this is bearish. So we have the weekly time frame bearish. Uh, we are going down on probably the daily time frame and see what we got over it for the daily time frame. As you can see, we don't have to spend most of the time with it. Let's see. Clearly, this is bearish. Simple as that. It's bearish. So we got weekly bearish, daily bearish. So we're gonna draw support. It's gonna be hard because we don't have like enough market, like enough data from this level. As you see, the market was pushing high so fast and so aggressive. So we didn't have like the market did not leave enough data on this side. So I can use the data from like 2018 because it's a very long time ago, and I don't think like it's gonna be respected when the price gets to that level. That's why I be trying to use the recent data, like the recent recent stuff that happened in the market probably 4 months ago. I don't want to use stuff that happened like 4 years ago, back in 2018. Now, so we probably not gonna be able to find like enough like resistance, like support resistance on the daily time frame. Whatever we're gonna try. Let's see if we can actually find one or two. And if we don't find any, we just gonna have to go on a H4 time frame to see if we're gonna find some over there. But pretty sure we're gonna find some. I'm gonna do this one. This one stop right here, and this one too, because we got wicks right here. The line chart does not count wicks, so it actually cut off where the wicks start. I can tell there is wicks that actually touches this line. If you go in a candlestick chart, let me just go. I'm just gonna highlight this one right here. I just do this. But so we don't forget it. So if we go to the chart, the candlestick, as you can see, there is a wick that actually touched this level right here, and this one was actually barely missed by a wick. So like I can say this is a very good support zone. Yeah, so it's better actually. I'm glad you actually got it. Oh no. And let's see if we can find at least two more. At least two more would be better. Yeah, I would take this one. I'll take this one because it's top right here, it's top right here, it's top right here too. And let's go to the candlestick chart. See, it looks really good. Yeah, it looks so promising. So we're gonna go back and see if we can find one more. Probably on the downside. I need to find one more on downside. Oh, we don't have enough chart. Got it. Let me see this. I'm going back to the candlestick charts and then see. Actually, yeah, this one is good. This one touches this one, touches right here, and then, yeah. So we are bearish. We don't need more like. We don't need a lot of we don't need that lot of tones on the upside. We need tones on the downside. Because the markets we saying like based on our technical analysis, the market is gonna keep on going down because it's in downtrend. So what we're trying to see is we need to find zone in the downtrend, on the downside, not on the upside. So I will go to the H4 time frame. As I can see, simply it's bearish. I would say this one looks better than the other pair we just analyzed like probably like 10 minutes ago. But this one is way better. This one looks much better. Yeah. As you remember, our auto block is just right here. Yeah. Our auto block is just right here. Our auto block is right here. We have our imbalance and like imbalance zone right here that the market we have to come and fill. We have a very big imbalance where the markets we have to come and fill soon. Right here. H4, yeah. So on this one we have the weekly bearish, we have the daily bearish, we have the H4 bearish, and we have auto block, we have imbalance done that we have to be filled, and then the market, we're hoping the market will continue its trend, which is a downtrend. So when now that's all I will do. I will just wait for the market to come to this level, and then I will go down to the lower time frame and find potential entries. I suppose will be right here, and then I'll be looking to continue the downtrend, which I only need like 1 to 2. You only need 1 to 2, and probably like you just need a 1 to 2 to be profitable. You need a strategy that gonna give you like 1 to 2 most of the time. So even if you lose like 50% of your trade you take, you're still gonna be profitable because your risk reward is twice the risk you're actually taking. Your profit will be twice the risk you're taking, which makes more sense. So you don't need to actually have like a 70 or 80% strategy win rate to be able to be profitable in the game. You can have a strategy that's 40% like win rate. You're still gonna be profitable because your risk is probably it's twice your winner, which makes much sense. So that's why it's better to be able to try to hold on your winners and try to cut off your losses so quick. That's all for today. Thank you so much for watching, and I'll be back next week with another video. I need to make like I need to create a really good community of, hey, I need to teach people how to trade. I've been trading for 4 years, and I've only been profitable in the past 2 years. So I decided to create this channel just to share actually what it is like to be a profitable trader, because I went through a lot, and I'm probably thinking most of you guys are going through a lot too. Yeah, I'm gonna start posting like live trade and how much I made every day on this channel. Just make sure you subscribe, and I'll see you next time. Peace.